if there was no Jupiter on Solana, there was no partnership like this, then we wouldn't have ever launched on Solana. Because, figuring out the community and then figuring out the politics, that, it's just there is no app in existence which can be, properly aligned with Ethereum and Solana at the same time. However, I do think even if Jupiter would have built a simple borrow and lending, they could have, integrated themselves into the overall market because of how massive the community is. But I just think, with Fluid and with Jupiter Land, we can just achieve a lot more things with capital efficiency that Fluid brings. So, it was also just, there was literally no back and forth. There was just a group created, and then Meow just messaged, do you want to do this or not?
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features Jupiter Lend, a new DeFi lending and borrowing product born out of a collaboration between the teams at Jupiter and Fluid. So there's two big stories to tell here. One is we think that Jupiter Lend could become the biggest lending and borrowing product in DeFi on Solana. But there's another really interesting story to tell about two very talented teams, one having roots in Solana, Jupiter, one having roots in Ethereum, Fluid, and the two of these teams coming together, working on different virtual machines, kind of like rebuilding the innovations and products that were brought to us by Fluid/Instadapp and bringing those over to Solana with Jupiter.
Yeah, I feel like you don't always see two already successful protocols kind of in their own right decide to team up, like maybe some sort of like merger or acquisition or something, or one protocol will absorb another one that wasn't doing so well. But I feel like this is an interesting thing that we don't always see in DeFi. And we kind of get into the backstory and the lore of why this relationship, why this partnership was so strong and kind of why it's happening.
So if you have a loan open on-chain on Solana, we're going to walk through all of the features and the benefits of using a tool like Jupiter Lend.
Yeah, and we also kind of go through hey, maybe this isn't just an if you build it, they will come. We talk about the massive amount of incentives that these two teams have been planning to make this launch a big splash on Solana. We talk about the revenue share and how this will impact token holders of Fluid and Jupiter.
Aside from all of the Jupiter Lend news, we also cover Fluid DEX Lite, as well as what's coming with Fluid DEX V2.
Yeah, and then stick around for the end because Kash shares some alpha for what's coming in Jupiter, outside of Jupiter Lend, that I'm sure you'll want to hear as well.
So just a quick reminder before we get started, you can go to the-edge.xyz to subscribe to the Edge newsletter and the Edge podcast. That'll give you real-time notifications whenever we publish a new podcast like this. You can also go to our link tree at edge_pod. That's the best place to subscribe to the Edge podcast on Apple Podcasts or Spotify or YouTube. And then one final shout out to all of our sponsors. Thank you to the folks that make all of this content possible. Again, all of our content is ungated because of the support of our sponsors. So make sure you go to the show notes to check out all the awesome teams that are behind us. We've got folks like TOROS Finance, we've got REDSTONE, we've got Maple Finance, Spark, and all sorts of other players in the space. But otherwise, we hope you enjoy the show. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge podcast and Edge newsletter. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over $1 billion in AUM across USDC and BTC products. And now with Syrup USDC by Maple, anyone can earn institutional grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge Newsletter. Falcon Finance, the team behind the fastest growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. All right, let's introduce Sam from Instadapp and Fluid, as well as Kash from Jupiter. Guys, welcome to the Edge Podcast. How are you doing?
Yeah, I'm doing great. It's great to be at the Edge Podcast again.
Yeah, super excited to be here. As I was mentioned, I've watched your YouTube channel for at least 5 years or something like that. So this is a little awestruck, little starstruck here, I should say.
We've confirmed Nomadic that we have a real viewer. So no, thanks so much, Kash.
Yeah, I think it's my dad and Kash now are our two viewers. So perfect.
So what has prompted the interview is there's been a major development, a partnership between Jupiter and Fluid. And really excited to dive into how you've navigated this, two major protocols, household brand names in DeFi, but in two different ecosystems coming together. It feels like a huge unlock. But why don't we start there then, Kash, with the story of Jupiter? Our listeners are probably a little more familiar with Fluid. We've covered Fluid over the course of a few episodes. We'll catch them up today, but I really want to introduce them to the incredible sort of Cinderella story of DeFi behind Jupiter.
Yeah, Jupiter indeed has had a long and storied history, but a lot has changed recently, in particular in the last 12 months. I think to the degree that most people know us, it's largely as a DEX aggregator, right? The place that you go so that you can get the best price, the best execution every time you trade a Solana token. And over the last kind of 6 to 12 months, we've really expanded beyond that. And now I think the best way to think about Jupiter is not just a DEX aggregator, but as a DeFi super app, right? Anything that you'd want to do in DeFi, we want to make sure that you can do that on Jupiter. So you're a new user, you're onboarding for the first time, you're going from fiat to crypto, you got Jupiter Mobile, the easiest wallet to use Apple Pay, Google Pay, and on-ramp. Then you want to trade some spot, you can use Jupiter Spot. You want to start to get into meme coins, you have Jupiter Pro. You want to trade with leverage, we have Jupiter Perps. You want to manage your DeFi positions, we have Jupiter Portfolio. The list goes on, actually. I could spend this whole hour just talking about the existing product suite. But the one kind of major gap that we had in this DeFi super app vision is the borrow lend market, right? The yield, which I think is one of the primary exports of DeFi as a whole. And that's really where these conversations started.
And then Sam, why don't we talk a little bit about Fluid? Give us the elevator pitch on Fluid. Just recently, the DEX volume on Fluid flipped to Uniswap for a day. So despite the fact that it's still relatively new, you've had just a huge amount of success in a short amount of time.
Yeah, I mean, the Fluid's entire success is just, I would say, from maths and algorithms, the advancement that we did from the innovation. There wasn't as you have already known, you've seen, there wasn't any huge marketing behind it. It's just providing better value to users in terms of LTVs, in terms of rates, in terms of smart debt, smart collateral, the whole new concept that we introduced to the ecosystem. So our DEX can survive even at a lower fees. It is currently, all our DEXs are currently the deepest on Ethereum. The correlated pairs that we support, most of those are the deepest on Ethereum. So we support the biggest whale trade, or we provide the best pricing and so on. All of this we were able to do because of the smart debt, smart collateral that we introduced, which just elevated the whole capital efficiency. And as you know, the Fluid protocol, which is it's a base layer on top of which you can build sort of infinite protocols. So every new protocol that gets added adds value to the overall Fluid protocol. We have DEX V2 in line. We have, we already had vault, lending, DEX, and there will be a lot more things. But overall, that better pricing with DEX V2, we will ape into more non-correlated pairs like ETH, USDC, and so on. So the target is to become the biggest DEX ever in terms of volume, in terms of fees, in every parameters. Currently, we just reached like biggest volume, but we were not the biggest fees because it was just correlated pairs. So the target will be to be best in everything, and that's what we'll aim to do. So still a long way to go.
I want to get more into V2 and volatile pairs in a bit, but I just want to go back to something you said. I love your matter of fact. Yeah, it's just math and algorithm. And it kind of takes me back to something I remember talking to you and DMH before you had launched it. And I'm like, yeah, well, what's your go-to-market strategy going to be? How are you going to get this? How are you going to distribute this? And you're like, yeah, I think every day we're just going to show dune charts of our volume climbing and, throw it up on Twitter and see what happens. And it's literally what you did, and it worked. And it's just kind of hilarious. But anyways, I want to kind of dive into this relationship between Jupiter and Fluid. And I'm just curious how it came together. I'm pretty sure there's some old connections here, but maybe one of you or both of you can kind of chime in on just describing that story. Because again, it is a bit of an oddity to see this kind of collaboration, I think, in DeFi. Makes sense to me, but yeah, how did it happen?
I think I'll probably be the right person for it. So 7 years ago, we met Meow when Meow was the advisor at Kyber. He helped us get our very first grant. So basically, Instadapp in some way got kickstarted because of him. And the Kyber gave us $25,000 grant where Meow was advisor. He helped facilitate the whole thing. He gave us the starting capital to just do whatever we want. There was no condition attached, nothing. Just go and do whatever you want to experiment with, which allowed us to work on Instadapp and launch. And then after a few months, or I think 4 or 6 months later, we got the fundraise. And Meow also joined us, Instadapp, as an advisor. So he helped us in the initial days on forming the Instadapp, some basic things, because we were just two geeks who are working, who are coding. But he helped more on the community side and other things. He came up with some names like the name of smart accounts or smart wallets is something that's invented by Meow. We launched it at the very first time, and he said, let's call it smart wallet. And we called it, and then it became the whole industry of smart contract wallets. Everyone just started calling it. Gnosis started calling it it's smart accounts, smart wallets, and so on. So yeah, it goes back way long ago, 7 years. When we just entered into the ecosystem, Meow was you can say kind of like a dad to us in that sense. He helped us pick up during that time. He believed in us when we were nothing. So yeah, it goes there. Then so there's just a very deep bond and friendship. And every few months or every year we keep on meeting him and so on. And then naturally it just came here. I just met Kash 2 years ago, 1 year ago, I think, before we actually started working on Jupiterland. Met him with Meow. So that was our first meeting in the here itself in Dubai.
I will say I have a very deep tie to Samyak as well, because it is due to Samyak that I learned Meow's real name. Meow, the co-founder of Jupiter, only goes by Meow. And I had asked him for months. I was like, brother, what is your actual name? We talk all day. I should know what your legal name is. He's like, no. And then Samyak and his brother rolled up to the cafe and were like, hey. And then you have to beep this part out because I'm not allowed to say his real name in public. And I was like, these guys. So yeah, I'm always going to be grateful to Samyak for opening that door to Meow's life to me.
The connection is clear. I'm wanting to talk a little bit more though about how did you all decide to partner up? There is clear innovations to Fluid, and there is an enormous platform that Jupiter has in terms of DeFi users, DeFi tools that you offer. I see the synergies from a distance, but I have always wondered how does this actually work? You've got open source code that's powering Fluid, and you've got a different virtual machine with Solana, and so it just seems like there's a lot of complexity there to navigate, and so I don't want to downplay like what a big move this was for the two of you to work together. Maybe Kash, you could tell a bit more about that.
Yeah, it's actually, as Jupiter started to make this transition from this kind of like one single product into this full suite of products, we realized that we needed to take a different strategy, that just trying to build everything ourselves was not going to be a path to success. And so we really embarked on what we call this ecosystem of founders strategy. So we were doing kind of M&A, 12 months ago. It's obviously become much hotter in crypto now, but I think we were relatively early to that trend of recognizing there was tons of great teams and talent out there that you could kind of bring towards a larger mission. So we did a bunch of those kind of acquisitions. Sometimes we would just like invest and get a majority share with an example. There was like Moonshot, which is a popular trading app in America. And then on the borrow lend side, it felt like the tech itself was so important that it was not the kind of thing that we'd be able to learn ourselves or really even hire. Like what you want when you're launching like large scale products, borrow lend being a multi-billion-dollar vertical by itself, you need to have someone with, as cliched as it is, with that kind of founder energy who can really like drive things fully. And then it just happened to be the case that Meow has been good buddies with Samyak, who's I think one of the smartest minds at DeFi for a long time. So then it became a no-brainer of like, oh, well, there's already a lot of trust here. There's a clear synergy that can happen between our community distribution, presence on Solana, and their kind of deep understanding of DeFi primitives and how to best build those. So it definitely is strange that it doesn't happen more often in crypto, I think, but these kind of efforts are essential to kind of like growing the pie and scaling really rapidly. So for us, it was like a slam dunk. I don't know how it felt for you though, Samyak.
If there was no Jupiter on Solana, there was no partnership like this, then we wouldn't have ever launched on Solana. Because, figuring out the community and then figuring out the politics, that, it's just there is no app in existence which can be, properly aligned with Ethereum and Solana at the same time. It's just like, if we would have just full ported to Solana, then Ethereum would have been upset. And it just could have something that could have not happened at all. However, I do think like, even if Jupiter would have built a simple borrow and lending, they could have, integrated themselves into the overall market because of how massive the community is. But I just think, with Fluid and with Jupiter Land, we can just achieve a lot more things with capital efficiency that Fluid brings. So, it was also just, there was like literally no back and forth. There was just a group created and then Meow just messaged, do you want to do this or not?
I think it might still be true. I don't know if there's a single piece of signed paperwork between the two companies right now. It's like still, I think, a handshake deal, right?
Yeah.
It's just deep levels of trust, I think, that make it work.
It makes sense that Fluid, I think, wanted to look to grow to like more users, more liquidity. There's a lot of demand for more DeFi on Solana. I mean, I have I've been frustrated with the fact that like there are lesser options. Like there is Jupiter, of course. There's been folks like Camino that I've turned to. Orca is top of mind, obviously Radium, but like I guess all I'm trying to point out is like it does feel like this partnership was very ripe to take place, and I see why both teams would benefit from one another. I guess when it comes to the liquidity though that's being deposited into like a Jupiter lend, what can you tell us about what can we do today there? Because like if I were to give the elevator pitch on Fluid, for example, I go to Fluid. I've got multiple positions myself open in Fluid on Ethereum mainnet and on Base. And the reason I use it is because I like the isolated risk, the ability to like have a specific type of collateral and a specific debt. I like the fact that I have smart collateral so that I can earn passive fees on like a basket of collateral assets. The smart debt feature is absolutely insane, turning my debt into a passive form of income with the trading fees. There is lower liquidation penalties. I mean, God forbid I ever get liquidated, but I think it's as low as 0.1%. And then there's the LTVs, which are the highest, as far as I know, on Ethereum. Like in terms of me borrowing a stablecoin against ETH or some other derivative of ETH, the highest LTVs are on Fluid. So if just porting that utility over to Solana makes sense because I have assets on Solana and I want to be able to benefit from all of the features that I enjoy there on Fluid. So anyways, what can you tell us about what is available today with Jupiter Lend? I mean, as we're recording this, I think you're still in a beta stage.
Yeah, so we are indeed in private beta at the time of this recording. I think by the time this comes out, we'll be public launch, right? All right. By the time you're watching this, dear viewer or listening, you'll be able to actually use the full product. Really, right now, you're not going to get that same one-to-one experience that's there on Ethereum on day one. As the old saying goes, slow is smooth and smooth is fast. And when it comes to something as important as DeFi and borrow-lend markets holding billions of dollars, we got to kind of walk before we run. So on the public launch, what you can expect are earning vaults, which are super simple, passive, one-click, start getting yield. Automatically, that'll get directed to the highest APY on the platform. Then we have the borrow-lend with the same isolated risk profile that you're used to from Fluid, plus the same incredibly high LTVs, the same liquidation engine that's 100x better than the competitors that are out there, along with a few other things. We'll have some multiply vaults as well. And should we talk about the refinance thing, Samyak, or should we not?
Yeah, we already have it on mainnet. So
okay, yeah. And you'll be able to, with one click, migrate your positions from any other borrow-lend protocol over in a refinance feature. Over time, I think is where we start to get to the smart debt and smart collateral. That's definitely one of the most interesting things and one of the biggest innovations of Fluid, in my opinion. As we'd like to get there, you won't have that on day one. But what you will have are, around 40 to 60 different vaults for different types of assets with heavy incentives from, I think, 10 different partners, including Fluid and Jupiter and everybody else that's out there. And hopefully a really smooth and simple UX that, everyone can find approachable.
Kash, one of the things you mentioned, this refinance option. So for folks that aren't aware, when you are holding a loan on something like Ethereum mainnet, one of the legacy benefits of Instadapp is they created recipes to use flash loans that would allow us to basically pay back our debt and then migrate the loan over to another platform. So you could, have a loan on like an Aave and move it over to Instadapp. Maybe you wanted to use all of the Instadapp tools. Or in my case, I migrated a loan from Aave over to Fluid, or you could, again, move to Morpho, whatever it is. Point is, it's been an extremely powerful tool. And I think it's been a huge part of the reason that Fluid was able to grow so quickly. That is allowing users who want to benefit from all of these enhancements to the user experience on Fluid. They're able to get there faster by using these refinance migration type tools. So as far as I know, this is the first time that this would be possible on Solana. I've been able to use flash loan recipes within a platform. There's clearly other teams that have built really cool features within their own platform, but I've never been able to go cross-platform for migrate maybe from a Camino over to Jupiter Lend.
Yeah, I think it is indeed, to my knowledge, the first time that anyone's done it. It is, for us, it was kind of a necessary feature. I think one of the things that we've always prided ourselves on is the quality of the user experience. In particular, Solana DeFi users are not the same as Ethereum DeFi users, right? They're kind of newer to crypto. They might not have, the vast sums of wealth all of you ETH guys have over there. But they certainly, they're more perhaps around trading than they are around yield generation. I'd say as a first approximation, right? And so we wanted to ensure that there was an easy way for a lot of those folks to kind of pay back debt and bring it on over. I'll throw it to Samyak, who can explain how it works on a more technical level. I believe it's quite similar to how it happens on Ethereum, although there might be some peculiarities of Solana.
On Solana, I think it's even slightly more simple because of the way, and Ethereum also recently supported that, you can use you can send multiple transactions. But on Solana, this was a by default feature where you can send a transaction in which you can send multiple instructions. So each instruction is basically a separate transaction. So basically it will be, once the flash loan protocol is there, it's just a basic off-chain script. We just need to bundle up all the instructions and so on and then just move. But overall, the strategy remains the same, what we do on the Ethereum side. And we build the infra for that by ourselves on the Ethereum side, the spells and everything. The DSA infrastructure that everyone is very familiar with on Instadapp. But on the Solana side, we don't have to do all this infrastructure because of how you can send a transaction. So yeah, when it's from that perspective, it's relatively simpler on Solana, but works more or less in the exact same way that we do on Ethereum, which is like take/loan, pay back debt, withdraw collateral, deposit collateral, borrow loan, pay back/loan, and so on.
This episode is brought to you by Mantle, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, Mantle is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow Mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi. Guys, can you walk us through which vaults are live now on Jupiter-Lend? Because if we go to jup.ag/lend, there are options. And again, like as we're recording this, we're in like a beta stage still, but you can earn interest by depositing tokens like USDC, Tether, the Euro stablecoin, USDG, and then Sol. So those all make sense. Competitive yields, typical sort of setup where you just deposit and you passively earn. In terms of the actual vaults, though, for borrowers, like what is available today?
So again, literally at the time of this recording, it's pretty minimal. I think we have 6, maybe 7 different vaults that are available, largely around Sol to borrow stablecoins, and then 2 kind of pegged assets, which would be 2 LSTs, including the Jup Sol and then Judo Sol to borrow Sol. By the time the public launch happens, we're expecting to have at least 40 vaults live. Those would include a number of different variations or flavors of Solana, of course, but also a few different variations on Bitcoin. We hope to have wrapped ETH on there as well, so you can bridge over your ETH if you want to put it over here for more competitive yields. And then hopefully, in the relatively short term, we'll be able to add in some more interesting longer tail assets. So Jup, of course, would be one that we'd love to support. And then I think the next horizon is a lot of these RWAs. So as you guys might have seen on Solana, we have a lot of things like tokenized equities, tokenized pre-IPO equities just launched. There's a lot of different commodities and so forth. And so I think that's part of the interesting kind of use case of Jupiter-Lend is we're going to be able to do stuff with the unique assets that exist on Solana that maybe have not quite made their way over to Ethereum yet, or maybe don't have as much liquidity on Ethereum or whatever else it might be. So it'll get big very, very quickly. And I think the future of crypto is not just this kind of global unified market, which we've been talking about for a while at Jupiter, where every asset is immediately interchangeable with every other asset, but also this vision of the world where every asset can be productive and you can earn yield on every asset that you have, because surely there's somebody out there who's going to want to borrow it for some reason. So that's the kind of longer term vision. But to start, 40 to 60 vaults, bunch of different Sol, bunch of different Bitcoin, a few altcoins, and then maybe some commodities as well.
When we are using a vault on Jupiter-Lend, are we going to have access to like flash loan type recipes the way that we do on Fluid on Ethereum?
Yeah, we will try to do as many things as possible before launch. But if something is not ready till launch, then it should be live within 1-2 weeks after the launch. But everything that you do on Fluid on mainnet, you will be able to do on Jupiter-Lend on Solana.
Guys, just kind of thinking ahead to your mainnet launch, you mentioned there'd be some protocols with incentives. I'm curious if you can share, anybody who's lining up to boost yields, and obviously it's probably a big part of the launch to generate a lot of mind share and, try and give some people a carrot to pull over to Jupiter Land. So yeah, just curious if you can kind of share a little bit of the insight to the strategy there.
Yeah, it's funny that you use the word carrot. So every year Jupiter does this thing called Jupiwary, which I'm guessing you guys participated in as well. Got a little Jupe airdrop. This past year, the DAO voted to approve 700 million Jupe to be given out during Jupiwary, and of that 700, 200 million was set aside for carrots, as we called it at the time, which were kind of product growth, community governance incentives to just kind of help grow everything. So we will definitely be using a portion, not all 200 million of those Jupe, don't get too excited, but we'll use a portion of those for incentives from the Jupe side. I'm proud to announce that Fluid is now also a Solana token. I think you guys just bridged over yesterday, Samyak?
Yeah.
So obviously Fluid is definitely going to be in there. And then, I could read the list. We're going to have a bunch of incentives around the stable coins. So you can expect some things from Circle. The homies over at Jito are going to be throwing in some incentives around with their JTO token. USDG is going to be coming in pretty heavy. They're making a real strong play on Solana in the stablecoin space. That's one to watch, I think, for viewers. Some other companies that I won't say, but Maple, Zeus.
One of the tokens you mentioned, USDG, which is a stable coin. Can you remind us, who are some of the teams in that coalition that are driving USDG?
Yeah, it's a unique approach that it has this kind of coalition rather than this single company that's kind of responsible for it all. So Paxos, I think, is doing a lot of the kind of technical stuff, but Anchorage is a major player in here, one of the biggest custodians in the world. Robinhood is involved, and a number of other players from across the ecosystem. What they're doing that's very interesting is they're going around and being able to offer yield shares to people that put it in the treasury, potentially to DeFi protocols that leverage it, and many others. And so unlike Tether, which is kind of famously kept a lot of that yield for themselves, as is their right, it's their business. There's no shade being thrown there. But I think that the USDG sees an opportunity to kind of bring on many more partners and try to drive liquidity by sharing a lot of that yield instead. So definitely one to watch.
Hey, speaking of sharing, I want to talk about the rev share between these two protocols, Fluid and Jupiter, for this product. I thought it was pretty cool. It looks like you've come to a 50-50 agreement. Was there any haggling? Did somebody throw out 60-40? Did somebody throw out 80-20? Did Sam and Meow just have a beer, shake hands and decide? Or how did you come to this kind of agreement too?
I don't know. I just have to go look at the chat. So it's probably Meow message, do you want to do this or not? I said, yeah, okay, let's do it. And he said, okay, then for 50. We're just trying to do 50-50 on everywhere possible. So it was as simple as that. There was literally no argument, no suggestion. It's just good benefit. It will provide good benefit to, I think, both of the ecosystem. And I think on the contribution side as well, everyone is just doing very good contributions from their side. Kash did a lot of, BD, got in the incentives and a lot of things since fast reruns. We did a lot of development. I think, it's just worth it,
It's what made it so easy is if you're working with old friends with all this trust built up, that you don't really have to get bogged down in the kind of details. Everyone is very happy. Everyone knows what they're bringing to the table. There was not a negotiation. And in fact, there have been times, if I can say this, Samyak, where one or the other of us have been hey, we'll cover this audit or we'll cover this whatever this thing is. And then the other one's no, we really should split it. So rather than trying to haggle, we're actually trying to find ways to make it more equitable every time we can. So we'll take 50% of the revenue. We already have what we call the Jupe accumulation plan in place with something called the Litterbox Trust. So of our 50%, actually 50% of all revenues will be going back towards this Litterbox Trust, which has this mandate to accumulate Jupe. So about 25% of all of the revenue that comes out of Jupiterland will be going back towards the Jupiter token, and then the other 25% come to us. 50% goes back over to Fluid.
Okay, well, I guess on this is kind of token tangential talk. I want to bring up something that I've seen has been on Fluid's roadmap for a while. This idea of hey, maybe once we hit this, I think it's $10 million annual run rate of revenue, that you would consider turning on token buybacks. And then I don't know how much you want to speak to this publicly, Sam, but I can kind of share some things that I've seen. I've seen people stating that I think with like the launch of Jupiterland, maybe with DEX V2, there's rumors that, maybe ARR could hit 50 million by the end of the year. Again, I don't know how much in the weeds you want to get with this side of things, but could you address any of that?
Yeah, so by the end of last year, when community was expecting some updates around the tokenomics on how when we did the rebrand from INST to Fluid, we started using Fluid aggressively for incentives. We also pitched that when revenue reaches, like it was a governance proposal from the team side, but not approved by the governance yet. But yeah, we announced that we said like when the revenue reaches 10 million, we can explore the buyback and see if that's the right route for the governance. We also have a governance proposal that most probably will go live next week. So according to now, it's like probably 15th of August or something around that. Since then, the announcement that we did, we talked to a lot of people. Some were, very in positive for the buyback. Some were very negative. So, I mean, we've collected all these thoughts, and that's what we are going to release on our forum post. We and let the community as a whole decide on what's the best path towards it. But the main goal for the buyback, if we go with it, will be that can the buyback relate in the token price appreciation, which can relate in the protocol's growth. The main goal here is that, if we're doing the buyback, then we should be able to get the protocol from currently 2.8 billion to, let's say, plus 10 billion in market size within next 12 months. So it's like the buyback should result into that, we can also start using token more aggressively for the incentives and see how we can grow protocol much faster. So there are different models that we will propose. There are different things we'll propose. We'll see like what are the community sentiments are. And accordingly, if it feels well balanced, we'll go with it. If it doesn't feel well balanced, then we can still experiment with it and, with an option that, it can be turned off or something like that. Well, we're trying to create a, big forum post around it to make sure that we are doing the right decision here rather than like spending, essential cash for the buyback too early.
One other thing I want to bring up too that I got a little bit involved in. So I saw that Fluid DEX V1 surpassed Uniswap volume, I think on the 24-hour time frame, like maybe a day or two. And there's some people kind of celebrating and sharing some images of that, and then there's some competitors that kind of jump into people's DMs and messages and say, hey, wait, like volume's not that big of a deal, like what do you generate on fees? And I honestly like kind of confuses me because it's almost like this implication like, hey, what you're selling is too cheap, you're not making enough money on it. Like it's just like a weird, it's odd to me because like ultimately, we're talking about volume, and I see this all being like a high volume game. And I see this like, hey, if you think this space is going to 10x in the next few years, like volume's what matters. And you can print on even small fees if you actually believe like I do that all of finance is coming on chain. But anyways, that's my rant. I wanted to just kind of kick that over to you, Sam, and just like, what are your thoughts with this? It felt like a weird sort of messaging.
I mean, when we started Fluid, we thought we were going to have fights with money markets, but we ended up having fights with DEXs. But yeah, so the thing here is, let's take the whole picture from the back. When we launched Fluid DEX, the fees in the market were quite high, and we never decreased our fees. We always kept fees exactly same as what the market is at that point. So we launched our USDC USDT pool at 0.01% fees. Back then, Curve was also having 0.01%. Uniswap also had 0.1%. So everyone had the same, and we also did the same because our goal was to win with innovation and tech, better capital efficiency and so on, rather than decreasing the fees. Then others started to decrease, and we started to match them because they were losing market share to us. So the next thing to do is, decrease the fees so we can still maintain the market share, but we can also decrease the fees. So that was a stupid sort of decision. And then everyone started to do this race to the bottom. And now within like 4 to 6 months since Fluid DEX launched, the fees on USDC USDT went from 0.01% to 0.0005%. And we are still winning. So it's like, if you want to decrease the fees, let's decrease. In the end, all the users are the beneficial, but before us, the fees was already high and we never decreased. We were never the first one to decrease it, but others started to decrease, so we just started to match them. And right now as well, we are matching, and we also announced Fluid DEX Lite, which will even make it situation even like which is going to add like 300 million in daily volumes to Fluid over next 2 to 4 weeks. So just let it marinate, let it get integrated everywhere, and then you'll start to see the volumes rise up. So our goal is never to win with doing fee decrement, but with real innovation. That's the same thing we are going to do with DEX V2, and we won't be releasing a pool with lower fees like everyone else will have the same fees.
Before we move on and talk a bit more about Fluid DEX Lite, and I do want to talk about Fluid DEX V2, can you dumb down for us, Sam, what is the explanation for why Fluid has been able to continue to grow in trade volume and eat up market share of trade volume? Because one of the things about Fluid DEX is that we have all of the different aggregators and market makers and whoever else that are routing to Fluid DEX. It's not like as many folks are going to a front end, something like a Uniswap. So that's been a part of the story to me that's been really remarkable, is this is purely the app developers, the protocols, the folks that are actually routing trades are routing through Fluid. It's not like you've got some huge retail base that's driving the volume up on Fluid.
So it's basically that a very simple example that I usually give is Fluid DEX just unlocked a totally new user base which didn't even existed before. So you can have your debt as smart debt, and you can earn trading APR on your debt. So let's say if you're just earning 2% trading APR on USDC USDT, the average borrow rate in the ecosystem is 5% on USDC and USDT. So if you decide to come to Fluid, earn that 2% extra trading APR, then your effective borrow rate will be 3%. So as a borrower, Fluid is the best place for you to borrow at the cheapest cost. While all other protocol are giving, are charging extra on the borrowings. And as an LP, you are an LP of USDC USDT, let's say you go to Uniswap and LP there. If you're earning 2% or even 4% on your trading APR on Uniswap, you won't LP there, because the better option for you to probably go and land it on Aave or Fluid rather than LPing at 2 to 4%. So, LPing on Uniswap at 2-4% APR has very low demand, but borrowing on Fluid at 2% discount has a very high demand. So we naturally have this deeper pool where, borrowers just get some discount out of their debt, which, so basically there's tens of billions of debt in the entire ecosystem, which we sort of activated. Then the combination of smart collateral, smart debt. The requirement for LP is very low. Even if you're earning 1% trading APR, you'll come to Fluid DEX. But if you're earning 1% trading APR on Uniswap, you will never go there. So it just changes the, I would say a 10x better capital efficiency in every way. And it also goes in the same way, as it's 10x better capital efficiency, it's also 10x more risk. So that's why in the volatile uncorrelated pairs, DEX V1 probably was not the perfect DEX. And that's why we are creating DEX V2, where, people can take high risk and earn high reward. If their strategy works out, they can earn massive money from there than what they can from Uniswap or any other protocol.
Hey folks, I want to tell you about our sponsor, Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions with battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs. Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
Sam, so something, an announcement we saw recently was this Fluid DEX Lite. Maybe can you shed a little light on what that is? And then also just what is the innovation coming with Fluid DEX V2?
So Fluid DEX Lite is something we just picked up, on our way, just like little cherry on top. It's like, and the only reason I created was because Ecobo community was pissing me off. So I just from the advantage that they have, so I just created the most gas efficient DEX. I won't say the most advanced, but it's the most gas efficient DEX. It's 2.5 times more efficient than the next competitor, and it's just the most gas efficient DEX in the ecosystem. From the ideation to launch, it took 20 days. We just quickly, it was a sprint, and there was a goal. We launched it within 20 days from since we decided to do that. And it's going to route all the small volumes on the Ethereum. If you go and try to trade USDC, USDT, $10, $100, $1,000, or even $10,000, soon it will be also 50,000, 100,000. It will just route from Fluid DEX Lite right now. But it's just launched like 3-4 days ago. It will get integrated everywhere. I know Kash, you're from Solana. You don't have to worry about gas and everything. But here now, as I said, the fees on USDC, USDT went from 0.01% to 0.0005%. So now it's not about the fee game; it's about the gas game, because the fee that you're paying on the gas is more than the fee you're paying to the LPs of the DEX. So the lower the gas fees of your trade, the higher trades that you can route, and there's a whole bunch of those things. So Fluid DEX Lite is the exact DEX as Fluid DEX, but it's a minified version where we focused a lot on the gas optimization. We made it super, super cheap. The entire gas takes like extremely low. I'm not going into the numbers because then you don't know, the numbers of the gas optimization. But
the numbers would mean very little to me, to be honest, Sam. And I know you know that, so appreciate it.
How about, Sam, how much would you say like an average swap is costing with Fluid DEX Lite on Ethereum mainnet? Let's assume it's a volatile pair, something like someone swapping ETH for stablecoins or stablecoins for ETH. Like, what would you estimate? And let's assume gas price is 1 to 2 Gwei on Ethereum mainnet. Any idea?
On the dollar, I can just give a weight comparison between the gas. So like Fluid DEX takes 155,000 gas. Uniswap V3 takes 125,000 gas. Ecobo takes somewhere around, I think, 90K to 100K. And then Fluid DEX Lite takes probably around 50K to 60K.
So you've reduced the cost by like 66% or so? Is that am I thinking about that the right way?
With respect to Ecobo, probably we reduced by 30%. With respect to our Fluid DEX, we reduced by 66%, 70% something. So yeah, is the focus is not related to fees. Focus is related to gas optimization here. That's the comparison. On the proper dollar value, I'm not sure, but it's usually between $0 to $1 at 1 to Gwei. But that $0 to $1 is also quite large when the LP fees is just 0.0005%. So yeah, I mean, a product that can only be is only successful on Ethereum mainnet, and it can't be used anywhere else. But you will see like how successful it will be on Ethereum mainnet.
Sam, I feel like we could do a whole podcast on DEX V2, but I want to give you the opportunity to kind of give us the high level notes and kind of changes and innovations here over V1.
So just briefly going on it is, the DEX V2, we're trying to create the most advanced DEX ever. It will be a whole infra, but the main feature that users will be able to use on day one will be the same smart collateral, smart debt, but with range order. So you can create a range order using your smart collateral, and you can create a range order using your smart debt. So you can place your debt wherever you want on a curve, etc., to make sure that you're providing a liquidity. So it will allow, so what you do already on Uniswap or other DEXs where, you select your own range, it will enable that. Currently on DEX V1, we select the ranges for the users. So, we are surely not the professional traders. But the DEX V2 will allow, so that's why all the correlated pairs that exist on Uniswap and other places, those LPs can come in, the professional LPs, and then they can run their own strategies, plus much, much more, because with the single dollar, they will be able to create $10 worth of liquidity using smart collateral, smart debt. They can run strategies that were not possible before. It will just open a new landscape where LPs and, financial people can play around. So it will just give all the management to the pool managers. So that will be the main unlock where, the responsibility is gone from team to LPs. We are just providing the tech, and now you can use any way you want. So that's why I'm very bullish that it will probably be able to penetrate the overall DEX market on the correlated pairs as well.
Guys, we're getting near the end of this one. I just want to kick it over to both of you and what's next? And Kash, maybe we'll start with you. It doesn't have to be Jupiter Lend, just what else is kind of cooking in Jupiter ecosystem that you want to share?
That is a longer question than you might think, quite honestly. So for anyone who's listening or watching, I would definitely encourage you to check out the token holders report that we put out for Q2. And in that, we talked about some of the things we're doing in Q3. Largely, those are around new product development like Lend, figuring out new things to do with the token, like our new verification system now burns the token every time somebody gets verified. Some payments products, desktop extension wallet, all these types of things. But I think the big one that everyone is kind of keeping an eye on right now is JupNet, which is coming up. So Jupiter itself has always been born on Solana, will always be on Solana. And what we did on Solana was kind of aggregate everything, quite honestly, right? Every asset, every DEX pool on Solana in one place. And we were kind of thinking about, okay, what is the next highest level problem that exists in crypto? And it is this kind of interchain fragmentation, right? Different assets, different people, different liquidity. It's just a nuisance to kind of get around. And so JupNet is like an omni-chain liquidity network. It's not really like a general purpose L1. It's purpose built for the best spot and perps trading experience across all chains with all different assets in a decentralized fashion. So that I think is what's got a lot of people excited over in the Jupiter community, and where the team is grinding very hard on that. I'm not involved in that personally, but it is definitely something to be very excited about. And I think we said in that report that in Q4, people will get some news on it.
Such a DeFi super app. I am amazed that all you guys continue to build, coordinate, manage. That. It's just so much product to stay on top of.
Can I say one actually other thing for you, for the two of you, as well as for any of your listeners that are kind of experimenting on Solana? Please do me a personal favor. Go to jupe.ag/portfolio. It's entirely free. There's no fees anywhere. It is the single best portfolio tool anywhere, in my opinion. Very soon, by the time this is out, we're going to have an airdrop checker. It shows you all your claimable amounts from any prior airdrops. You'll be able to see your net worth vary over time. You can see your annual APY and your yield for your entire portfolio right there, and then optimize it. It's an incredible tool for anyone that's seriously into DeFi. So I got to do a little plug for that, because I think people don't really know about that one as much.
That's huge. I actually had no idea until today when I was opening up Jupiter. I had never seen that, and I have personally struggled to track my wallets. But Sam, why don't we give you the final word on like what else is next for Fluid. Like what else do you think listeners should know about?
On a higher level, it's mainly the two big launch. I mean, Fluid DEX Lite we just launched this week, which you will see it grow over next 2 to 4 weeks. Then there is Jupiter Land, which I'm personally most excited about because of the growth. I mean, I just feel like it will become the biggest protocol on Solana, probably in 3 to 4 months, maybe earlier, who knows. And then there is DEX V2, which is still, I think, 2 months away. So these are just the timelines for next 3 months, I would say. Aside from that, we keep on exploring new concept, new things. We are currently also exploring formulas and new ways of how we can innovate in the perp space. It's ongoing at a low-key basis. We have some solutions, but our goal is mainly to, can we do a 10x improvement here rather than win by distribution? Can we do any technical advancement? We are probably not the best guys at distribution. There are other people who probably does a better job than us. But what I think our specialty is we can surely build a 10x better product. So that's what we are exploring. Our goal is also to have all kinds of financial services on Fluid. Anything, options or perps or anything that exists in the financial world, credit or fixed rate and so on. Fluid should be that over next 3 to 5 years.
Guys, I think this is a great place for us to close out. So first, I want to remind our listeners they should learn more about Jupiter Lend by going to jupe.ag/lend. They should follow Jupiter Exchange on X. Then you can learn more about Fluid by going to fluid.io. You should follow 0x Fluid on X as well. And then Kash's handle is Kash, KASHDHANDA. We'll put that into the show notes so you can easily find that. And we've also got Sam's, which is SMYK Jain, JAIN. Guys, thank you so much for coming on. It was so great to meet you, Kash. Sam, obviously, we are so grateful to have you back on the show. It is remarkable what you have accomplished. To Nomadic's point earlier, you told us you were just going to, basically, go about posting updates on the trade volume growing over time. And I know that your go-to-market has been more sophisticated than that, but I never imagined just how quickly you all would grow. I think that was my hope as a user, knowing the benefits of Fluid, but it is so difficult to ship real innovation in this space and then to bring it to market and to find real product market fit. And given the success of Jupiter, I can't imagine what's to come with these two giants of DeFi working together. So anyways, really, really excited for what you guys are doing. But yeah, any final word here, guys, before we go?
I think this is a lot of fun. I'm very excited to see what people think. I will say, if you do try out the private beta or the main launch, feedback.jupe.ag. That's the only way that this thing gets any better. So let us know what you think over there.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.